Everybody, I'm Giuseppe Basile, also known as the FibStalker. Thanks for joining in and watching this video. This is a daily and intraday review for today, March the 8th, 2018. It's 12 p.m. EST time in Toronto. This video is part of the FibStalker analysis and trading service. Now, as usual, if you're not read and accepted the this usual disclaimer here, please pause the video here and read and accept the text here. Past performance is not indicative of future results, and trading forex carries a high level of risk and may not be suitable for all investors. All right, thank you very much. And now let's dive into our markets, and I want to start from the dollar index. The rotation here seems now complete, and when we look at the dollar index here, we see now that the market has respected the 89.52, and the market has also last week failed the extension here, the extension short. Okay, so that was the important development last week. This week we're seeing rules applying, 50% trading, and as you can see, the first target 91.50 lines up with that level and area of potential resistance, which is the 91.50 area. All right, so as this rotation continues here, we should see this week this market continuing higher and all the other markets moving in accordance. The SP 500 is still moving laterally here. Excuse me. We saw a gap down at the 2 days ago that was filled in yesterday. The longs 26.59 are still in control. However, this market is still in a lateral move. Okay. How do we know that they're still in control? Because the 27.41 has failed here, and but however, this market is still in a range and it's still actually respecting the areas of the range. So be very careful with longs. Although on the daily longs are in control, on the overall this is still a lateral move, so be cautious as usual. Gold and silver are confirming what we have been seeing on the dollar index. So gold has respected the 1332, and every time we have these areas on the charts, we need to test them. Let's not assume anything, because anything can happen in the market. Okay, so now this market has a clear setup here and very clear first and second target as well, 1287 and 1265, and no doubt how the 1264.65 here also lines up with the 50% long. Okay, that's the last 50% long from lows to highs traded. Market went into the previous level, was not capable of getting into that first target, and so now what it's doing, it is reversing. It has respected temporarily the 1304, and now it has a short setup, and very likely that 1304 is going to fail. Okay, so that's, excuse me, that's our expectation. Or we should say anticipation what could happen here. So the next retest could be it's a dangerous retest and could actually fail. Silver, as we mentioned also in the previous weeks, it's much weaker here with 16-17 level that has tested back mid of February here. It was never retested, so price is just continuing lower, and we have a first target which is very clear, the 1583 level. Okay, so if you're short this market, you should really try to get into the first target here. There are also other targets here, particularly the first target of the 19 short here on the weekly, but that's away. So the first target here could be the 1583. So let's start from the majors then. Australian dollar, US dollar. This market has traded, has continued lower here, and it's still within this 79.46 move. Never came to trade the full 50%, 78.50. Other markets have done that. And when we look at the I'm going to remove this level here, never traded. So the only information we can work with are the 50% short 79.46. That's first target 76.69 and then 75.38. Now note that this market is in a range, and it's very probable that it's going to retest that 75.80 and possibly even lower. Okay, so this is the extension long that has played. It was the only area that we were capable of identifying in this market. So that area can be retested, and possibly the market could also go and test and do an actual test of the 50%, 74.80. The euro dollar has seen weakness after breaking the sequence here, and this market is within 50% short. Let's don't forget that. So it was dirtily tested here, but still the extension highs to highs has failed, and now this market has the potential to move into the next measure move of this sequence higher. So the first measure move of this one to first target and above, and the next measure move is the 1783. Okay, so it seems a long way, but that's really where this market could get to. Okay, so we'll see how that plays out. The pound versus US dollar has, on the other hand, traded a 50% short from the swing high on mid of February here to lows that traded 2 days ago, and it's now continuing lower. The first target here is very clear, is the 36.12, and any retraces in this market could be opportunity for to sell continuation lower here. All right, the next market, US dollar Canadian dollar, went to trade into the area of resistance here. This is 29.30. Now renewed strength in the dollar. We're seeing this market continuing higher, and we have two levels that we have to watch. One is the 50% extension, the extension long after the 50% is traded, and and that level never came into play. So apparently here, the level that is coming into play and has been confirmed it again, it's the inner highs to highs here. Okay, so this market keeps trading in extensions on the daily, and the 128.75 came into play again, and that's what it's trading at the moment. And this level, let me remove the other one so we have no confusion. This level has targets above a 130.59 and 131.54. Okay, and 131.54 would actually break the sequence short here, the sequence that we're seeing here, first sequence and second sequence. So this is going to break the sequence on top of this 50% long. Okay, the next market is US dollar Swiss franc, which is seeing a strength as well. I printed higher highs here after playing the 50% as we have seen in the dollar index as well. Okay, so the second test here is failing. Second tests are always dangerous tests. 94.74 is failing, and this market can continue higher into 95.61. Okay, and after that we'll need to evaluate and go back to the go back here to the weekly time frame. And remember that there was a busted setup here that actually brought price into the first target. That's something similar we've seen on the US dollar Japanese yen. So the next measure move that we have to consider on the weekly is highs to lows. Okay, so there's a potential for this market to move much higher into that area, and we will see whether that area or anything before will come into play. There is also a 50% short that we need to take into consideration, and that's much closer, 96, and it would be in between the first target of the current measured move and the second target. Okay, so the first target should be pretty highly probable here, because the actual resistance only comes, the start of resistance only comes at 96.10. Okay, so this is something to keep in mind as well. The US dollar Japanese yen has been the weakest actually in the pack here, and we know that the Japanese yen has been very strong lately, to the point that this market is usually technical, and lately we had a few hiccups here, so which means that there's a lot of emotional participation in wanting the Japanese yen moving lower. So the 50% 106.46 here has traded. This could put under pressure now that the dollar index is recovering, so we'll see how that plays. But this market is still, as we can see from the weekly, is still an extension short at 108.02, and that might be, which is also previous resistance, and that might be it for this market in terms of moves higher. So we will see whether this market is capable of moving there. New Zealand dollar, US dollar had also traded the 50% short here. This market has still support the 71.90, so at the point at this time is simply moving between highs and the support low. We'll see whether that gets broken if the dollar index continues higher. Okay, but for now this market has traded the 73.11 short into the 71.90. US dollar Singapore dollar, it's actually now respecting the 50%. We have seen this market breaking the shorts here and respecting the longs once at the end of February, twice here, and this could be an indication that this market is ready to make its move into 133.59, okay, which would be the 50% from previous swing high. So any opportunities, if this market moves higher, retraces, should be opportunities to now more safely. I mean, anything is never safe in the market, but because of this behavior here of market respecting this area of longs, it actually suggests that longs are in control in this market. All right, so this is it for today intraday review on the majors and the other main markets. If you have any questions, you can shoot them in the room. Thank you very much, and I'm gonna publish some charts on other pairs throughout the day. Thank you very much. Bye bye now.